welcome to the Motilal Oswal studio. You're watching Buy Now, Sell Now on ET Now with me, Shriyansi Singh and Snehi Shah. And over the next 1 hour, we'll get all of your stock-related queries answered from both a technical as well as a fundamental perspective. But well, first things first, Snehi, we've got to take a look at the markets and quite the sharp cuts coming in, at least as far as the markets as well as the broader indices are concerned.
Everywhere, in fact. I don't think there is any point in the market where we're seeing some respite other than the India weeks, because at least that is looking good right now. Let's take stock of what the market is up to right now. You have a 1% cut coming in on the Nifty as well as the Sensex. We're very close to breaking that 22,550 mark as well, so not looking good at all. And India weeks is up 1.5%. It was a spike of 7% on open, so we've cooled off significantly over there. Looking good is India weeks. Nifty Bank continues to decline, a 1.2% cut coming in. It's the broader markets that are continuing to take it on the chin today because big cuts coming in on that front as well. Nifty mid-cap is lower by almost 1.4%. You have the small cap that's also in tandem with the mid-cap, a 1.4% cut coming in on that index as well. From the Nifty pack, you have Dr. Reddy's, Aisha, M&M, ITC, Nestle barely doing anything for the Nifty, but nonetheless, they're in the green right now. On the flip side, it's Wipro, deep cut, a 3.5% cut on that front. HCL Tech lower by 3%. Infosys, TCS. So it's clearly the IT pack that is lagging because your top 4 Nifty losers are from the IT pack. On that note, sectorally, Nifty IT has to be the biggest loser of the day, a 2.5% cut coming in. On the flip side, Pharma is barely holding on to the green by the skin of its teeth, but you have FMCG, Auto, Realty, PSU Banks, Metals, Energy. All of them are tanking in the red. That's what the market construct is looking like right now.
Well, absolutely. That's what the market construct is looking like at this point. And of course, you do have a whole host of counters that are holding on to a tinge of red at this point. So that's really what the picture is emerging as far as the markets are concerned. But with that, let's also get you some important highlights coming in. As far as the event is concerned, the NASSCOM Tech and Leadership Forum 2025 is the event that we're talking about. Let's go across and listen into some key commentary coming in from there. In fact, we do also have Cheryl, who's standing by with more updates from that particular event. Cheryl?
Right, absolutely. Actually, Shreyansi, we are at the biggest of the event when you talk about the tech and the AI play. We are currently at the NASSCOM Technology and Leadership Forum 2025, where we will be hearing out from who's who when you talk about the technology from the industry, the technology industry. Remember that they're discussing from AI's limitless potential to evolution to work. We will also be talking about cybersecurity, especially when you talk about the India construct, as well as the digital revolution that is at play in India and all across the world. So there's a lot to talk about. There are a lot of exclusive interactions lined up also for all of our viewers. But this, remember, viewers, this is a show where we will get you answers for all of your stock-related queries. You can connect to us on the number that will be flashing on your screen a short while from now. And we have Kunal as well as Gaurang, who are there, part of the show, to take all of his stock-related queries. And before we actually dive into taking stock-related queries, Kunal, let me come to you and get your view, especially on the entire tech play, given the fact that this one is being touted to be one of those winning sectors going ahead, given the fact that what's happening in the U.S. economy, the way how the Trump administration is at the helm. What's your take if you talk about the entire tech play? I know, especially on the charts, which tech stock is looking good to you?
Yeah, good morning, Cheryl. So, largely, I think when you look at this on a longer term basis, the IT stocks, the tech names, they generally tend to do pretty well for themselves. We've seen 2021, we've seen 2022, 23, a phase where many of these large cap IT stocks, they managed to withstand, more than 50% kind of a correction, and these stocks made a very strong and dramatic comeback in the second half of 2023 and 24. Good part. So that tells you the entire strength for the large cap IT names as well as the mid cap IT stocks on the long term basis. I believe right now also is a phase where these IT stocks are going through a very similar patch of a correction. So I think whenever the correction settles into these stocks, you would probably have great opportunities from long term play. My sense is that large cap names, for example, the likes of TCS, Infosys, I think from current levels towards maybe another few more percentage points on the downside, I think they could probably be considered as a good staggered buy from a longer term play. I think the mid-cap IT space is also quite vibrant, and we've seen stocks like L&T Infotech, Mindtree, Technology Services, Coforge, Persistent. I think these stocks also offering some classic returns on the longer term basis. So better the correction for these stocks, the better could be the opportunities from a long term play.
Well, there are lots of names to take a look at as far as Kunal's recommendations are concerned. A very good morning to you, Kunal, as well as Gaurang. The next query that we actually have is coming in from Arun Kumar Bhatia, who's writing to us all the way from Dubai, wants to know about SBI because he's already holding on to 200 shares. Now, he's not mentioned the buy price and he's not mentioned whether or not he's sitting at losses or profits at this point. But what do you regardless make of this one then, Gaurang?
Well, thank you so much for having me on the show. Morning to all of you all. I guess today there is some report about some sell side recommendation from some institution. In terms of numbers, if you ask me, well, I don't think there was any major disappointment either in State Bank of India or in some of the other public sector banks on which we have a fundamental coverage. In fact, a shade better compared to second quarter is what I would say. Numbers for the entire banking pack, as a matter of fact. On the fundamental side, we are maintaining our positive view on State Bank of India. And I was looking at some of the very crucial aspects of the earnings, and that is the interest income and margin, the gross and net NPA, provisioning, profitability. And on all accounts, I think what we saw in the earlier quarters, there has been signs of improvement, and this improvement is going to slip over to the next, that is the fourth and the last financial quarter this year, and of course the next financial year. So if you are in for a long term, stay invested, no need to hurry in terms of exiting the stock. Somewhere close to about 930 is the approximate target on State Bank of India fundamentally.
All right, so that's the take coming in on SBI. But Gaurang, I'll have to come back to you because we have a query coming in from Ignatius. He's writing to us from Kolkata and he wants to know about ITC as well as ITC hotels. He already has 240 shares of ITC, which he's holding from the levels of 260 rupees per share. And because of the demerger, he's also got ITC hotels shares as well in his portfolio. So he wants to know for the next 3 years, should he continue to add on, hold on to this and add some more in his portfolio? What's the take coming in on ITC and ITC hotels in particular?
So this is a question, devil in the deep blue sea, Cheryl, because when it was not demerged, we had coverage on ITC as a consolidated business, and ITC hotels used to contribute to a decent sum on the balance sheet. Post the demerger, since the company is listed as a separate entity, we don't have coverage on ITC hotels. But let me give you a view about ITC. Per se, we have a coverage. 550 is the approximate target from a long-term point of view, and the entire hotel industry. So for ITC hotels, I think one of their landmark hotels that they used to have in Bandra, Sea Rock, that is going to go under hammer, or it has already gone, and they are going to create a new hotel over there, a new structure. In terms of hospitality industry, we have already seen a 15% plus uptake in the room tariffs post-COVID. From now on to into the future, some of the statements made by the management of hotel industry, we can expect another 15 to 18% tariff hike. Room occupancy has gone up, room rates have gone up, income from banquets is looking very, very strong. To traveling, whether it is for professional, whether it is for leisure, whether it is religious travel, or now very recently introduced in the budget, medical related travel. So we expect the entire hospitality sector to do well, Cheryl.
Right, so that's the take coming on the hospitality sector, the ITC business as well. But Kunal, let me come to you and let me ask you, what's your take coming in on ITC? I know you will not be able to talk about ITC hotels. Wouldn't put you in a spot over there, but what's your take coming in on ITC in particular? Because you've been screaming from the rooftop. For now, have you developed a sore throat because of that?
There was a bit of a sore throat somewhere in 2024. But then I think now ITC is, looking at a point where the stock has come back to a very moderate kind of a zone. So, there was a point when ITC was almost at 500, I think mid of 2024, August, September somewhere. And from there, the stock has corrected 20%. Now, when you compare this, for example, with its peers, from the FMCG pack as such, then I think ITC is the one which has gone through a very, relatively strong, price trend or less correction as compared to many of its other peers. So that means that the stock is relatively very strong. And when you have stocks which are relatively very strong, they are the ones which generally make a very strong comeback whenever the sector gets into a revival. So I think now we could be at a point where it's a matter of time where many of these FMCG stocks, the hotel space, etc., these stocks could start to look very attractive. You might see these stocks getting to a recovery phase. And whenever that happens, I believe ITC could be amongst the top movers on a medium-term basis. So I think at current levels of 400, the risk reward would start to look very attractive, but you might have to keep some powder dry in case if the FMCG stock gets into maybe first a final leg of correction. So maybe another 5% lower from current levels is where I would suggest to add further.
All right, then that's a take coming in as far as ITC is concerned. So Kunal is still quite bullish as far as the stock is concerned, and Gaurang thinks that between ITC and ITC Hotels is actually quite the choice. Devil and the Deep Blue Sea is the kind of choice that you're seeing. But time for a very quick breather. On the show, when we come back, we'll continue taking all of your stock-related queries, so don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. In fact, the next one that we have is coming in from Selvam Kunal, because he's writing to us from about Happiest Minds. He wants to know if he can buy at the current price. What is the kind of target that you also have in mind, at least on a one-year basis then?
See, you can look to buy at current levels, but I would believe that a better confidence could emerge once the stock closes above the 50-day moving averages. Now, intraday wise, the stock has many a times managed to breach below its above its 50-day moving average. That level as of now is closer to 700 for Happiest Minds. So I think it's better to try and wait and watch for the stock to break past and confirm a close above this average, because that I believe could be a potential signal of a reversal. If that doesn't happen, then there could be a possibility that the stock may continue to drag and then continue to have this formation of lower highs and lower lows. So I believe on that aspect, I would suggest a buy only above 700 mark, which is the 50 DMA for Happiest Minds.
Alright, then that's the take coming in as far as Happiest Minds then is concerned. Gaurang, I'll come right back to you because we do have Vidya writing to us from Bengaluru. Vidya wants to know about the 520 shares of IRFC that she's holding on to, and the price that she bought these at was 157. She wants to know if she should be adding at this point, holding or booking losses. What do you think?
Well, so I keep my comment restricted to the sector, that is Indian Railways. And, if I vaguely recollect, quite some time ago when the IPO was there, I think we covered IRFC via an IPO note and had given a subscribe. This is, I vaguely remember. But coming to the sector, I think first of all, look, this sector saw a dream run along with defense. And then, of course, we've seen profit booking consolidation. If you ask me about the sector, Indian Railways, firstly, I think in the budget, what was elaborated by the Honorable Finance Minister in terms of improving the connectivity, resolving the last mile connectivity issue, upgradation of trains, stations, tracks. I think all this will augur extremely well for companies which are associated with Indian Railways, whether they are government owned or whether they are privately owned. The problem is, because of the run-up and profit booking, investors are now getting a little bit excited in terms of whether there is going to be a downside. Well, if you ask me, I think defense, railways, power, capital goods, engineering, these sectors, if you are invested, you need to have at least 3+ kind of time horizon. Don't invest in these sectors from 6 months, 1 year or 1.5 year kind of time frame, because execution takes time for these sectors to translate into earning.
All right, then, that's a take coming in as far as the railway pack then is concerned. But Kunal, I'll come right back to you. Can you tell us about IRFC 520 shares? Buy price was 157 rupees. Currently, I believe the stock is around those 123 levels. So Vidya is sitting at losses. What do you make of this counter at these levels?
See, I would suggest that if you're a long-term investor and I think you're okay holding to the stock, irrespective of whether the near-term price trends could probably correct, I would suggest to hold on to that, because there is a strong possibility that IRFC on the longer term basis is going through a corrective phase. Now, the stock moved from 20 to 200 in a matter of, I think, 1 to 2 years. And so it's bound to be a point where from 200 to 20, the stock is bound to come back towards, say, 100 to 120 kind of a trading range. So I wouldn't be surprised that if in case there is any further correction for IRFC in the next 3 months or so, but that could actually be a good opportunity for you to try and average in further for the stock if you're a long-term investor. So this, I believe, could be a decent opportunity maybe a 50% correction from the all-time high levels. That's closer to, I think, 110 mark as a ballpark number for IRFC. That could be a good level where you may look to add for the stock.
Okay, so that's the take coming in on IRFC from both the pack as a whole, the railway pack, as well as the stock-specific, chart-specific action. Kunal, coming right back to you, we have our viewer Mohit who's writing to us from Ludhiana. The stock in question today is Delivery. He's got 3 shares of this company at 280 rupees per share. His time horizon is 3 years from now. What can he do? Should he continue to hold? How is this looking like on the charts?
Well, I think at 280 levels, if you've bought, then you've bought closer to the current market price for the stock. And then looking at the structure, the volume setup, and especially the volume setup, which is very attractive for Delivery, because in the last 1 month, the volumes on the sell-off have been on the higher side. The stock has fallen from 325, 330 levels to almost 270, 250, 260, 270 thereabouts for Delivery. But I think at current levels, the risk reward would actually start to look a lot more attractive if you're a long-term investor. So since you have a time frame of 2 years plus, I would suggest that you should hold on to the stock.
Alright, then that's a take coming in as far as Delivery then is concerned. But time for a very quick breather in the show. When we come back, we continue taking all of your stock-related queries. So don't go anywhere. Welcome back. Thank you so much for staying tuned in. Well, let's continue taking all of your stock-related queries. And the next one, Kunal, that we have is coming in on Varun Beverages from Swati, who's a regular viewer of the show and was also very thankful to you. She's saying she's a fan of yours. She wants to ask about Varun Beverages. She's holding on to 500 shares. Buy price is 570 rupees. What do you make of this one? She actually wants a combination view, Kunal, so I'll come to you first.
Thank you so much for that, Swati. So I think on Varun Beverages, after this 30% kind of a correction from 650, 700 mark towards sub 500 levels, it looks like that the stock has come back to an oversold territory. What's attractive for Varun Beverages is the sell-off in terms of volumes. So the last 1 month, when the stock has fallen from 600 to sub 500 where it's trading right now, the volumes have been pretty much on the higher side for the stock. And that indicates that maybe the major part of the pain could actually be out for the stock. Now what happens is that you don't expect a V-shaped recovery into stock prices after such kind of a sharp sell-off. There's bound to be a more of a 3 to 6 month kind of a grind for these names. And that grind actually becomes a very good opportunity if you can maybe stagger your buying prices and then look out for strategic dips or falls into stock prices as good buying opportunity. If you do that kind of a strategy, then I believe from a long-term play, the risk reward would start to look very attractive. So I would suggest that hold on to your existing quantity which you have for Varun Beverages. But I think over the next 3 months, there could be a point where the stock may look fairly attractive in terms of risk reward, where you may look to add further.
Alright, that's the take on Varun Beverages coming in from Kunal. But Gaurang, tell you what, I'll come right back to you, because not only is Swati asking for a combination view, but we also have Rajpreet Singh writing to us from Ludhiana, who's also mentioned that he's a big fan of yours. He's holding on to 200 shares of Varun Beverages at a buy price of 350 rupees per share. Wants to know what you think of this one then.
Well, so, unfortunately, first of all, thank you very much for those kind words. Don't have a specific standalone coverage on Varun Beverages, but I definitely agree with what my good friend Kunal has just mentioned. Just to add 1 or 2 points on the fundamental, I don't think there is any other listed company available if you want to do a peer comparison with Varun Beverages. And the segment that it caters to is always a fast growing segment. It's fundamentally, though we don't have a coverage, but if you look at the balance sheet, well, it looks like the company is going in the right direction, and the strategy at ground level also augurs extremely well for future growth.
Looking good for Varun Beverages, and very strong conviction coming in from both our experts, Kunal as well as Gaurang. But let's move on. Hi there, welcome back to Buy Now, Sell Now. Let's keep it going with all your viewer queries, and viewers keep writing to us and we'll keep addressing your queries as the show progresses. Next query coming for you, Gaurang. Let's talk about banks and financials, because our viewer Subrata Mukherjee is writing to us from Kolkata. He wants to buy SBI and Bank of Baroda because he's expecting another rate cut. Would you first agree with that? And second, if that were to happen, do you believe these 2 stocks could be the biggest beneficiaries of that? And he's asking for your advice. What's your outlook?
I don't know if wishes were horses, beggars would ride, right? So it will not depend upon what my or your expectation is. It will all wisdom upon the Monetary Policy Committee and, of course, the situation as far as the inflation is concerned. But yes, I think the inflation has been in control. The last number that we saw, there is a likely possibility of two rate cuts coming through. I beg your pardon. When they will come, and quantum most hypothetically approximately about 0.25 basis rate cut, unless and until the inflation has a pleasant surprise for all of us. And this too, I think, will possibly happen in the new financial year, that is 1st April 2025 onwards. For this financial year, we don't expect any rate cut. One is done and dusted, and I think that was given after 5 years. But we do expect two rate cuts post 1st April in form of 25 basis point cut. Whether to buy State Bank of India or Bank of Baroda, don't buy it only on the basis of rate cuts. Look at the earnings. And on earnings front, like I was mentioning a while back, we are extremely positive in terms of improvement. There has been significant improvement in some public sector banks' earnings. And this improvement is also going to slip over to the fourth and the last financial quarter, and of course the new financial year that will be entering into 1st April 2025. So on the fundamental side, we have buy on both State Bank of India as well as Bank of Baroda.
That's a take coming in as far as SBI and Bank of Baroda then are concerned. Kunal, tell you what, let's keep it going with some of these banking names, because we do have Krishna writing to us from Chennai, who's writing to us about Utkarsh Small Finance Bank. Wants to know about the 600 shares that he's holding on to. Average cost price for him was 58 rupees. He wants to know if he should hold or exit. So what's your recommendation?
I think exiting now at current levels would not be a good strategy, because I think, if I'm not wrong, this is almost like the 11th consecutive month of a negative price trend for Utkarsh Small Finance Bank, and the stock has corrected from 58 or 60 rupees to current levels of 25, 26 thereabout, which means that potentially over the next 1 to 3 months, there is bound to be a point where the stock would get into a V-shaped recovery. And when that happens, you might probably expect that the stock may come back to at least 35 to 38 kind of a trading range. So if you're looking to exit also, I would suggest to just wait out for another 1 to 3 months. There could be a possibility that after such kind of a sharp multi-month correction on a consecutive basis, the stock could get back into a very strong V-shaped recovery.
That's the take on Utkarsh Small Finance Bank from Kunal. Gaurang, coming to you, our viewer Dinesh is writing to us from Delhi. He says he's holding 200 shares of Adani Enterprises at a buy price of 2,300 rupees per share. He's asking whether he should continue to hold or time now to average it out, because that stock is at 2130. He's got it at 2,300. So what's the outlook? Should he hold on to what he has, hoping for a recovery? Should he average his holding by buying some more at this price, or should he just completely exit his stake?
Well, I will leave this comment on whether averaging or not to my good friend Kunal, because I think he's more capable than me. As far as the company is concerned, again, we don't have a specific coverage on Adani, but this is a flagship company, and it has done extremely well in terms of earning visibility, growth, etc., etc. Dark clouds in terms of whatever happened in the past are now done and dusted. And our sense is that on earnings and growth, the company should deliver from a long-term point of view. I won't give a specific buy, sell and hold because we don't have coverage.
All right, then that's a take coming in as far as Gaurang is concerned. Kunal, tell you what, I'll come right back to you, as Gaurang has also mentioned about the levels. Tell us what you think about this one then.
Yeah, I think Adani Enterprise, specifically the stock at current levels of 2100 thereabouts, I would probably believe that it's an attractive level where you can look to start buying or entering to the stock. Now, I understand that the stock has been into thick of news flows, and then we've seen a phenomenal uptrend for Adani Enterprise in 2022-23. But I think post that correction which happened in 2003 thereabouts for the stock, it seems to have lowered the beta quite significantly. So I think opportunities where these stocks correct by 30-40% in a span of 3 months, 6 months, I think they generally come out to be good buying opportunities from long-term play.
Okay, so that's the take coming in on Adani Enterprises. On that note, that's all the queries we could fit in this edition of Buy Now, Sell Now. But viewers, don't forget to keep writing to us, and we'll be addressing all your queries same time tomorrow. But on that note, Kunal and Gaurang, thank you so much for joining us. But before we wrap it up, just quickly, merits to take a look at the market. We're above the 22,600 level. We have seen a slight bit of a recovery. We can hope for the second half of the trading day to be better. But on that note, we'll wrap it up on Buy Now, Sell Now. Thanks so much for watching.